Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hello everyone, welcome back to my channel. My voice isn't great, so you'll just have to bear with me. Microsoft here, weekly chart. You can see the usual up pattern here and the big south candle here on that week, and then the flagging pattern. Okay, switching to the prediction for March, I annotated these zones of resistance with the all-time high here and some support below. A few days later, which is today, 7 March, you can see that price did get rejected here with a big red candle selling down to this support. Support held, and price has come back up to retest the bottom side of this gap. My annotation here shows the resistance, and I think price will hit that, maybe bounce around, and then fail, okay? And that's due to the bearish divergence. You can see it there. So lower prices for Microsoft. Switching to gold miners, the ETF, look at this nice big green candle here for last week. We can see that for March, which is this green candle here, was where I took profit. So I closed out my position. If you go back to the video from a few days prior to that, I told folks this would be a great entry here at the bottom of this downward trend where it meets the purple trend line. And if you were in that trade, then you would have gotten 10%. And my prediction since then was some consolidation and then a breakout. Switching to 7 March today, you can see that price did a breakout way earlier than I anticipated. I thought that this was a really nice place to take profit, which from a technical analysis standpoint, that is the right spot to take profit if you were to do it that way. And I wanted to wait until price came back down to hit this trend line here. Okay, so the idea is take profit here, let price behave how it behaves up here, have it come back down, retest, and use that as support before you take a long. So take a long here. Instead, price did all of that. Let me zoom in here. They did all of that on this candle. So you can see that price opened the day. So how to read a red candle. Opened the day here. Buyers and sellers fought up and down. So you can see it at one point it went all the way up to here. And at another point it went all the way to here. A lot of selling and buying here. Eventually it sold all the way down and it closed at the bottom of the candle. Not the bottom of the wick, but the bottom of the candle. This would have been an awesome entry, but I wasn't following the charts carefully at that time at the close. I was busy, so I didn't get the entry. That would have been a beautiful entry because then that would have been another 5%. So if you bought in here and stayed in the trade all the way up here, well, I commend you. It's a 15% gain. You may have some more upside up to here. I'm not going to chase price. So that's one thing that I teach is don't chase price. Once you miss the entry, then just let it go. Okay. Allow price to behave as it needs to. I mean, you might want to take a short here if you wanted to. For myself, I'm going to wait that price hit that. You can see that the volume candles here are getting smaller. So I think the buyers are going to take profit, let them do that. And let's allow price to come back down to the zone again, and we'll consider taking a long. Switching to XOM Mobile, you can see this the past week, this rising wedge here. That's a bearish pattern. On 4 March, I spoke about resistance here, and that if price were to get below this zone, that it would be resistance as well. I talked about how this 200-day moving average would be resistance, and with all this bearish divergence, the price was going to go further south. Switching to 7 March, this is a much further zoomed out view because I want to explain a few additional things. First, I want to talk about my prediction from 4 March. I was wrong. Okay, I said that this would be resistance here at the 200-day coming down, and the top of the gap would be resistance. The price would fail and go further south from there. In fact, it gapped up, okay, to the top of this trend line. You can see that this trend line has legitimate contact points on this candle, this one. When it did go over it, sellers came in and sold it down. Buyers attempted to buy back up, but failed again. Same thing, it came up here. So this trend line here is legit. Same thing here. That's another point where it touches the trend line. So it's many touches across this trend line. So this is very interesting. They bought it up, hit the bottom of the trend line here, and today it busts through. Now, I'm not fully convinced, okay, because bearish divergence remains down here. And you can see, if I zoom out, this point here starts this trend line, right? Goes all the way here. Price came up over it, spent a few days, a week or so over it with bearish divergence. Sellers came in, sold it back down. It came down. Buyers came in, tried to sell it, buy it back up, but it hit the trend line, hit this trend line. And then sellers came in, sold it down, and it's been below it since. Now it's retesting it. I think in the next couple of days, price will come up, hit this, retest it again with the bearish divergence. I think it's going to fail, so it'll be lower prices. So if you want to take a short, I mean, this is an objective short. I might do that myself. A small caution that this is a 200-day here, so that might provide some support. So there may be some support here, okay, if it comes back down. But ultimately, I think it's lower prices for XOM Mobile. Switching to Bitcoin, this one has been hard to predict the movement of, being straight up. On 4 March, we spoke about how the price here at 67, right, closed the day at 67, that it would likely flag upward, maybe get up to the close to 70,000 with the rising wedge pattern and then fail due to this bearish divergence down here. I mean, there's tons of divergence here. And then one might say that, oh, well, on this move, it burned through the divergence. Sure, that's one way to think about it. I've observed over the past 6-8 months that market action has been burning through divergence, but it's doing it in a way that it's almost like it's adding to the additional pressure, and then it adds this little bit of additional divergence only to subsequently fail, subsequently fail. Switch over to 7 March. So 7 March, you can see that price, it continues to retest the 68, 69 zone. I think that it will continue to have a hard time to get through it, and further prices to come down to where this zone of support is. And I think a lot of folks who are in Bitcoin would say, why are you so bearish? Well, I'm not necessarily bearish. I'm just saying this is not an objective long. This would be an objective long if the divergence down here changes to something bullish, okay? So let's monitor that. Those are my predictions for the next week, and that's it for today. Thanks. As always, remember that my content is for educational purposes only. It's not investment advice. Please give it a thumbs up and subscribe. And when you subscribe, please do hit the bell icon